Hey, good day. Super excited. You're welcome to Financial Trading Culture series with Owolabi, an episode that we allow you to be able to learn how to multiply your money in the Forex market, in the cryptocurrency market, and also in the stock market. And today I have an amazing analysis for you guys. I gave you this analysis some months ago and it was posted on the Telegram group. And if you're not on the Telegram group, you want to make sure you click in the description below the Telegram group so you can be added and you would not miss any updates and post of trades that we have for you. So what's my view on Bitcoin? Because when we had the retracement, a lot of people felt, wow, Bitcoin is going down. But as an institutional trader, there are certain things you want to look for in the market that makes you count your moves. Okay, so this happened in the month of February. Yes, in the month of February, we had a rejection at this zone. And if you've been following me, you know that I don't joke with supply and demand levels. And this is the level right here. We have a drop, we have a base, and we have a rally. So having established this zone, this becomes the demand zone. And this demand zone, let's go to monthly. This demand zone got activated from monthly. Now, here is the concept about the way the order flows in the market. Now, when the market comes from a monthly level, especially a monthly demand, it will have a rejection at monthly supply. When the market picks up at weekly demand, it will most likely has a rejection at weekly supply. So you must understand the journey. And for those who are in the ITC community, they already know that. Now, because we had a rejection here, which is a stop loss on, you will agree with me that the market is yet to break this zone. Now, until the market breaks 28, that is when we will say that Bitcoin will start the bearish move. But right now, we are yet to see that. And we got a rejection here where we had a confirmation on 4 hours time frame, and we're able to cut that move. Now, when the move got up, this is why you also need to always hold on your trade, because the journey is from A to Z. This is the rally base drop. It's from A to Z. However, in between, you will see B, C, D. So you want to see A, B, C, D, E, F, G, H, I, J, K, L, M, till you get to Z. Why? Because this is how the market is structured. So you won't be able to leverage more on understanding the journey. Now, because this market took off from monthly demand, it's going to be ending minimum to the monthly supply. So if you have attended my training before, I will always tell you that we are looking at Bitcoin to get to an average of 56,000, between 56,000 and 67,000. And all of that move is in this space. However, when you now come to maybe daily time frame, you will now begin to see what I'm talking to you guys about. This is where we are coming. But look at that. After we had the change of trend, the market pulled out of it, came back. Now, this is our first entry that I gave you guys on the Telegram group. Now, it went up again. It came back. And at this point, I know some people will be saying, oh, I don't think it's going up again. It pushed up again. Now, at this point, it has confirmed a higher low, a higher high, a higher low, a higher high. Now, when that is confirmed, it means that we need to see the completion of this move. However, when it got to this zone again, it rejected. And a lot of people will say, wow, Bitcoin is going down again. No, guys, when you understand the journey, you will stick to the journey. So, Max, if you have entered here on a buy, and you see that it went up again, you will do some add-on here at 39,800. you do another add-on here. However, you are not to change the bias. The bias is that it's coming in. So that is why when I tell you guys, when you go in a trade, you take some profit. Now it came back, you add, right now your capital is more here. Okay, it went up again, you take some profit. Now when it came back here, if you have started with $100, it got here at $150, for example. You took $50 as profit, you are still in the trade. When it came back down again, you add back the $50. And right now, when it gets here, you can have made like $300. You take some profit again, you take $100. You leave $200 in the market. Now, in the market retrace again, the $100, you add more $50. Now, this guy goes up again. Okay, don't let me go it that way. This guy goes up again, then it drops again. You take some partials here because the market will always leaves cliff. You have what is called the impulse, the correction, the continuation, correction, continuation, correction, continuation, till it gets into this place. So guys, this is what I have for you today. You must understand the behavior. Oh, Mr. Mayowa, what should I have done right now? What you expect to do is that you'd have gone in on this trade, on the buy, and you keep holding. However, make sure you are going in with your calculated risk. Okay, because I don't want you all to don't go into the market with all your capital. Like I do tell you, or maybe I'll do another video explaining to you how you can trade Forex full time. Because you need to understand that when you're making the money, you don't even go, when you want to start, you don't even go into the trade with all your risk. And maybe in that episode, I could share with you how to use the calculator. All of these assets have their own trading calculator, which in subsequent episode I will share to you guys. If you want me to analyze any crypto asset, I want you guys to comment it below. I would work on it. And on Sunday, I'm going to be sharing, on Saturday, we're going to be having a trade, a time together on why and how you can multiply, you can grow small capital when it comes to Forex trading. Okay, I'll see you guys in the next episode. My name remains Mayowa Owolabi. Don't forget, if this is your first time, make sure you click on the subscriber button and the notification bell so you don't miss any episode. Have a pleasant evening. I'll talk to you guys soon. Cheers.